Larry Fink, founder and CEO of BlackRock, the world's largest asset manager with nearly $7 trillion under management, announcing today that the firm will make investment decisions with environmental sustainability as its core throughout the firm. Now, Fink's annual letter to CEOs closely watched, of course, and this considered a watershed in the world of business, oftentimes changing the conversation and dialogue with these letters. Did it with purpose over profit, if you remember, 2 years ago, which turned into the Business Roundtable letter earlier last year and sort of dominated the conversation for so very long. In the letter, Fink writes, quote, "The evidence on climate risk is compelling investors to reassess core assumptions of modern finance." He continues to say, quote, "In the near future and sooner than most anticipate, there will be a significant reallocation of capital." In the letter to clients, BlackRock will announce a series of changes, including making sustainability integral to portfolio construction and risk management. It's going to be exiting investments that present high sustainability-related risk, launching new investment products that screen out fossil fuels, and strengthening its commitment to sustainability and transparency in investment stewardship activities. It plans to be voting against, by the way, boards and managements that don't disclose their sustainability goals. The fossil fuels that are going to be screened out of are going to include target date retirement programs. So you're going to be starting to see over the next year and two 401k programs. If you had a target date
does this mean they're going to sell all of their assets in coal miners or ExxonMobil or Chevron?
If you're in an actively managed fund, they're going to get out of thermal coal and some other related items.
But not all the big oil
right now
majors yet.
Most of the actively managed stuff, I think you're going to see a gradual move out unless you see a path, if you will, for them in a sort of major renewable-like way. They're not, and we're going to talk about it because you're going to see the interview that we sat down with Larry Fink to talk about all of this. But you're, obviously in the passive stuff, if you own the S&P 500, the classic S&P 500, you still own it. I think his view is that over the next 5 years, there's going to be a meaningful shift among all investors such that it, and we talked about it, it may very well be in the next 5 to 10 years, the thing on our screen on Squawk Box in the morning that shows the futures of the S&P 500, there will be a different version of the S&P 500. There'll be a different version of the Dow Jones. Let me show you what happened during our conversation. We're going to be showing you throughout the next 3 hours. But I asked him what went through his mind in writing this year's letter, one that he said was the hardest one he's ever written. Here it is.
Well, it was the hardest letter I've ever written. And I do believe I became more emotional as I wrote it about what we need to do. And more importantly, the reflection on my 40-odd years of being in finance. And I was thinking about all the different crises we've dealt with in my career. And it's very clear to me the physical changes that we may see with climate change are more permanent. We don't have a Federal Reserve to stabilize the world like in the 5 or 6 financial crises that occurred during my 40 years in finance. This is bigger. It requires more planning. It requires more public-private connections together to solve these problems. And I do believe many of these problems could be solved, but the actions have to begin now.
There have been a lot of big companies and big investment firms that have talked about sustainability and climate change. But none of the largest money managers in the country thus far have made sustainability and climate change a central core tenet of their investing thesis. Why do you think that had been up until now?
Well, I think many reasons. One, you could debate whether the science was real or not real. You could debate whether the science is more accurate. And I think over time we're seeing more evidence that science is real. Two, we are hearing from more and more of our clients worldwide. And I'm talking about clients from the Middle East, clients from the south of the United States to the north of the United States, China, all throughout Europe. Clients are now asking us more and more questions about climate change, sustainability, and the physical impact and how should they think about it. And so as the largest investment firm in the world, it was very clear to me that more and more clients are looking for advice from us And we needed to really focus on how this is going to change. And quite frankly, in the last year, we actually have seen more and more sustainable products and more demand. So probably the most important inference from my observations is I believe we are just beginning a major reallocation of capital.
What do you mean by that?
I believe more of our clients worldwide believe in some form of the science, if not all the science, of climate change. And they're asking how should they be better prepared in their investment criteria. More and more clients are looking for a more sustainable portfolio to be more prepared. The other thing that I think I've made allusions to in my letter was I do believe this is going to change the municipal bond market. Areas that are more impacted by climate change is going to have harder times to finance their debt if they don't focus on the impact of climate change in their district, in their region, in their cities. I believe countries who don't focus on it could have serious impact related to climate change. So, unfortunately, from what I see, we don't have allowed enough conversation, and we are not focusing on this redistribution of capital. And I believe we're going to see more and more investors looking for advice. Where should they invest their money? To help us in this process, though, we need more transparency at the corporate level. And this is one of the key things. You know, for now over 8 years, I've been writing CEO letters about long-termism, and nothing could be more long-termism than climate change. And so we are asking every public company to report under SASB and to report under TCFD. And so we can have better granularity at the company level to see how they're performing. And I truly believe the purposeful companies that I write about for the last few years are going to be the companies that are focusing not only on their stakeholders, but they're going to be focusing on the long-term impact on climate change and how it impacts their company.
Do you believe the science?
I believe in the science, but I did not write it as an environmentalist. I wrote the letter as a capitalist, and my job is as a capitalist to help prepare our clients for the redistribution of capital, and more importantly through that is to provide them with an investment portfolio that will outperform.
And you can watch the entire interview with Larry Fink on CNBC.com, and we'll, of course, bring you more excerpts of it throughout the next couple hours. You know, this is, as you said, we were talking while this is going on.
Yeah.
We're all going to Davos next week. This is going to be the single biggest topic there. I would actually argue to you, I think that sustainability is going to turn out to be the single biggest topic of 2020 for business writ large. And I think we don't spend enough time talking about it. And I hadn't even appreciated the amount of both energy and effort that companies and money that they are spending, whether it's Amazon with their sustainability
Walmart's
program,
been doing it for over
Walmart,
a decade.
but they're buying forests. They're doing there are internal charges that are taking place where they're actually charging each other's departments for these things, not shadow money, real money. And I think we are sort of at a tipping point.
Walmart has gone like store by store for the last decade and tried to make every one of its stores more sustainable, from the rainwater they use to the electricity to...
I think what we're talking, though, about is something even much more significant. People who are going to be getting to not just carbon neutral in some cases, carbon negative.
I don't know why. I don't think you should talk about it in terms of just purely in terms of CO2. I think you should talk about sustainability in terms of natural resources, in terms of what goes into the ocean, in terms of clean water, in terms of sustainability of life on the planet. Who is not for sustainability? Nobody's for fleetingness. Nobody's for temporarity. Of course we're for sustainability. For years, Malthusian arguments have been made that we're going to run out of things. And we will run out of fossil fuels eventually. And we will transition to sustainable and renewable energy. But you also want to couple this with a sustainable economy and to go immediately towards non-economic sources of energy at this point. In Davos, they're going to talk about ending the fossil fuel-based economy. You're not, Andrew, don't interrupt me. You're not going to end the fossil fuel-based economy anytime soon.
And by the way, Larry Fink is not trying to do that.
Okay, I'm so excited about.
I don't say that Larry Fink's not trying to do that. I think Larry Fink would like to if he could.
I know he would. And Larry's been a lefty his entire life.
I think that Microsoft would like to. I think that Apple would like to. I actually think that most major corporations, including Walmart,
you don't need to fixate. You don't need to fixate on carbon.
But what was interesting about
you
your
don't need to fixate on carbon.
Andrew, what was interesting about your column?
You're telling me about to focus on carbon?
I'm saying you don't need to fixate it.
No, but what was interesting about Andrew's column is the idea that Larry's doing this because he has not been as forefront as a lot of people have been pushing him to do. His point is there will be millennials who will be taking over CEOs and reallocating some of this money. And as Andrew said, if he did this 10 years ago, it would have been better for his investors because if you look at the energy sector over the last 10 years, it's been up 2%.
We'll see what happens.
Being an energy investor over the past 10 years has been a terrible, terrible investment. That is true, irrespective of what your views are.
But we still have a fossil fuel-based economy globally. So and China's not going to change. India's not going to change.
Neither is the United States.
So one of the things that Larry is saying in this letter on fossil fuels specifically, he's not saying I'm getting out of all fossil fuel companies. In fact, I would actually argue today he's going to get a hit from the right and the left in all sorts of different ways because there are going to be people say he's not going far enough, and there's other people who say he's going too far on one side. But specifically on fossil fuels, he says, look, there's a transition period that's necessary.
It's a long
There's a cost to that, and we have to be mindful in how we get there.
So that you don't force people out of jobs along the way.
I don't think that he's necessarily saying that. Having said that, I think there's a lot of companies that are spending a lot more time than we are talking about on this program that are talking about these issues, not just talking about them, spending real money that's hitting their bottom lines related to these issues. And I think that the fact that he is having this conversation, no other U.S. American major investor has had that conversation the way he just did, and that's why it's significant.
Once again, though, we're having the conversation, and they're all still flying to Davos on their private jets. No one's walking the walk yet. No one's willing to do anything that would stop eating meat. No one's doing any of the. It's just having the conversation once again. Now, there's a big continuum on what we need to do. There's AOC and Bernie over here that are willing to spend $40 trillion because it's so imminent and such a crisis that it needs to happen. Then there's the EPA at this point that has a lot of people that are still skeptical about the science, appointed by Trump, who's a skeptic as well.
So just let's not get people who don't appreciate the science, but that's
not true. Okay, name your favorite climate scientist. I can name 10 that are skeptical. Can you name a single one? Judith Curry, Roy Spencer, John Christie, Willie Soon.
Call every business leader who's spending their money and energy on this. You think they're just.
No, I'm not saying they're not. I'm saying everybody wants sustainability.
We're running a show here about businesses and their stocks.
Powered by fossil fuels, all the lights are on, all the cars. Are you swimming over to Davos and back?
This is retrograde. It's just complete.
Let's have the discussion, Andrew. That's what we're doing.
I just think that there's a meaningful conversation.
Who doesn't want sustainability?
And you're just trying to make light of it. Because
no, I'm not making light of it. I just don't know. It's not. I'm a scientist. I do not believe that trace CO2 causes every adverse weather event.
That CO2
causes every adverse weather event that we've had for 4.5 billion years. Okay.